Hi, your girl Sue here. It has been a minute, but we are entering one of the best weeks in SoFi history. January 30th, 2026, SoFi reports Q4 earnings, and with the stock trading into the final stretch, expectations are already clearly defined. In this video, I'm breaking down exact analyst revenue and EPS estimates, what the market is pricing in, and why the last few trading days before earnings can be the most misleading. Why Q4 2025 matters. Q4 is critical for SoFi because it closes out the full 2025 fiscal year and sets expectations for 2026. This report isn't just about a quarterly beat or miss. It's about confirming whether SoFi can sustain near billion-dollar quarterly revenue while maintaining profitability. Let's start with the numbers the market is already expecting. Analysts are forecasting Q4 2025 revenue between $973 million and $985 million, putting SoFi just under the $1 billion quarterly revenue mark. That range reflects current consensus estimates heading into the January 30th earnings release. Let's look at EPS expectations and profitability focus. Alongside revenue, the consensus EPS estimate sits around 0.11 to 0.12 per share for Q4. That's important because it signals continued profitability rather than just top-line growth. At this stage, the market isn't debating whether SoFi can grow. It's watching whether earnings leverage continues to improve as revenue scales. Context versus prior quarters. For context, SoFi reported nearly $950 million in net revenue in Q3 2025, representing approximately 37% year-over-year growth. So even though some forecasts suggest Q4 revenue could come in slightly below the prior year's quarterly peak, the broader trend still shows strong underlying business momentum. Growth trend single-quarter optics, what the stock often does before earnings. Historically, in the 5 to 7 trading sessions leading into earnings, SoFi often trades in a tight range, typically within a 5–8% band. That price action usually reflects positioning and liquidity, not a sudden change in fundamentals. This is where weaker hands often get shaken out ahead of the actual earnings catalyst. Key area the market is defending. Over recent weeks, price action has consistently interacted with the same general zone, suggesting the market is waiting for confirmation rather than front-running the report. Any real directional move is more likely to happen after earnings and guidance, not before. Frame as behavior, not price prediction. What will actually move the stock after earnings, post-earnings, the reaction will likely come down to 3 numbers. Actual revenue versus the $973–985 million consensus range EPS delivery relative to the 0.11–0.12 expectation forward guidance for 2026, especially revenue growth and margin outlook. If SoFi delivers within expectations but raises confidence around future margins, short-term volatility may fade quickly. If this breakdown helped, hit the like button. It helps this reach more investors. And comment below, are you focused more on revenue, EPS, or 2026 guidance going into earnings? Thank you for watching. See you next time.